Hi, I'm Mike Malachi, CPA with Pink Harbor CPA. The Federal Reserve has just cut interest rates again, marking the third rate cut this year. In this video, I'm breaking down for you what the decision is, why the Fed made it, what it means for mortgages, IRS debt, and borrowing, how it affects the economy, and what you should do now. Let's dive in. What just happened? On December 10th, the Federal Reserve cut rates by another 0.25%, bringing the target range down to 3.5% to 3.75%. It's the third cut this year. But the big story is the 9-3 split vote, signaling a real disagreement inside the Fed about where the economy is heading. Why the Fed cut rates? The Fed cut rates because the job market is cooling, inflation is still a bit too high, and recent economic data has been uneven. With certain uncertainty building, they opted for a small, cautious cut to support the economy while keeping inflation in check. Now let's talk about what this means for borrowing. Short-term loans and variable rate debt. If you have credit lines, HELOCs, adjustable rate loans, or some business borrowing, you may see slightly lower interest costs. These products follow short-term benchmark rates more directly influenced by the Fed. Now, the IRS debt. The Fed's actions can influence IRS interest rates, but not immediately and not always proportionately. IRS rate cuts adjust quarterly, and they are tied to federal short-term rates. A series of Fed cuts often results in IRS interest rates trending downward, but usually with a delay. What about mortgages? A very common misconception is the mortgage rates drop automatically when the Fed rates cut. That is not the case. Mortgage rates follow long-term Treasury yields, not the Fed funds rate. Because of that, mortgage rates can rise even when the Fed cuts, or fall when the Fed holds steady. Analysts currently expect 30-year mortgage rates to remain in the low 6% range for 2026, meaning we may see some easing, but not a dramatic drop. If this is useful to you, be sure to like and subscribe so you don't miss out on any of our upcoming videos. We upload new updates and guidance regularly, help you stay ahead of the financial and tax changes. Let's talk about how this affects the economy. Rate cuts can stimulate the economy by making borrowing cheaper, encouraging spending, business investment, and refinancing. But the Fed also issued careful guidance. Officials signaled a higher bar for further reductions, meaning they are not committing to a long series of cuts. Inflation and economic uncertainty are still major concerns. Now, about that split decision. The 9-3 split decision is a major takeaway. Some Fed members pushed for a bigger cut to support the weakening economy, while others wanted no cut at all because they're still worried about inflation. This divide shows that the Fed isn't aligned on where the economy is heading or how quickly rates should come down, which adds uncertainty to future policy moves. Will there be more cuts in 2026? The Fed's projections show disagreement here as well. Many officials see the possibility of only one more quarter-point cut in 2026, while others believe no further cuts may be warranted. That means future rate cuts will be fully data-dependent. Inflation, job trends, and consumer spending will determine the path forward. What you should do right now. If you have a variable rate debt, monitor your rates to see if they adjust downward. If you are considering buying a home or refinancing, watch long-term Treasury yields rather than the Fed announcements. For businesses, this may be a good time to evaluate financing or expansion plans, as borrowing costs may ease slightly. Keep in mind, the Fed is signaling caution. This may be one of the last cuts for a while unless economic conditions worsen. In closing, the rate cut is meaningful, but its impact varies depending upon the type of debt and your personal situation. Mortgage rates may not move as much as people expect, higher interest rates may adjust later, and the economy is still facing mixed signals. The split decision tells us the Fed itself is uncertain about the path ahead. Now, tax season is once again upon us, and at Pink Harbor CPA, we are experts in tax preparation for individuals and businesses. If you need help navigating your tax situation or you want professional guidance, call us at 856-226-9524 or use the link in the show notes to schedule an appointment. If you found this video helpful, make sure to like the video, subscribe to the channel, and share it so that more people can stay informed.